Welcome back, folks. We have the Dow. Dow Industrials right now up 386. We get the Nasdaq up 101. S&Ps are up 44. Let's go over to our man, Mr. Teddy Kekstadt, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Kekstadt, what's going on, brother?
Hi, Tom. Hi, Tommy. Well, the dollar bears are raging right now, right?
Yes, we are.
Absolutely. You know, we were talking about that last week about how, you know, we're looking for a longer-term little weakness in the dollar. And, wow, we really have been seeing it the last couple of days. You know, it's funny that the last 3 weeks, the dollar's ended the week kind of strong, you know, relatively on like the end of the weekday, you know.
Yeah.
But the Sunday, Monday, Tuesday trade has really been burying the dollar over the past couple of weeks, and we really got it going on right now.
You know, it's going to be interesting here. I guess, you know, last week, Teddy, it kept rejecting, you know, the dollar index kept rejecting that 96,385, and then it finally did it. So it's going to be intriguing here, you know, how it's going to deal with this 95,716, man. You know what I mean? But
sure. Well, you know, the area you're talking about right now, we haven't seen that since back in June 10th when the dollar index bottomed.
Yes.
You know, so and like you're saying right now, this is a critical area to see how we react today, and it's really interesting because the euro, the pound, Australian dollar, New Zealand dollar, the yen, everything is stronger versus the dollar today, except for one currency. And this is kind of interesting. We have a little bit of divergence going on here.
Okay.
The U.S. dollar Swiss, it bottomed out already last week, and it tried to come back and hit the dollar again this week. But today, it made a higher move low and rallied. So, and now it's just hovering below, making a higher move high on a daily basis. So while the euro is rallying against the dollar, the pound, you know, these are all pressing new move highs. We have a little bit of divergence.
Yeah.
And while they're still pushing the dollar down, this one hasn't been able to push the dollar down. It actually failed today.
No, that's quite. No, I can see that, man. Not only that, I mean, if this Swiss goes up a little bit more, I would almost break its downtrend of the last 3 months or something, right?
Isn't that something that while the dollar index is getting hammered, all of a sudden the U.S. dollar might have an uptrend beginning against the Swiss,
right?
You know,
so that would be intriguing because if that's what we get, then you're really going to watch the dollar that it can turn in a second, right? I mean,
absolutely.
Right.
Absolutely.
I can see
and that's what I think we're looking at is I think that the whole world's looking at the broad base.
Yeah.
And, you know, you and I both know that the yen, the Swiss, and the U.S. dollar are flight to quality currencies.
Right.
Now the U.S. dollar is getting hammered versus the yen today. I mean, it's getting smashed, you know. So, and that's interesting, too, because the yen – over the past 4 months, except for a few volatile days where it actually had either a trend move or just a large range, it's had a very tight range. It hasn't really gone very much as far as action. And now today we have the dollar getting beaten up in a very harsh way. And then since in the past hour, right before I came on, I was listening to your last show, and when you guys started the new hour,
yes.
That's when the dollar started to kind of gain a little bit of strength and come back.
It did.
So I think that the euro and the pound, they're still going to keep pressing it because the trend is your friend. Higher move highs and higher move lows are indicative of what? An uptrend,
right.
Correct? You know, but with the Swiss, like I said, today's bottom on an intraday basis, if it breaks out to the upside over the next day and a half and makes a higher move high, you're getting a neutral call there. And that's where I think you're going to start to see some interesting divergence. And I was looking at the interest rates, and I think you can see why the dollar is doing this. Because the 30-year bond and the 10-year and stuff like that, they're ticking up in price, so obviously lower rates, okay?
Yes.
And as the 30-year starts to inch back up towards that higher end of the range where it was after we set the spike back in March, that's giving us a signal about what the big money is doing out there and where interest rates are going. You know, we have a split geopolitically. You have the EU starting to really work with China, where we still have whatever trade deal we're dealing with right now with China. You know, so they're going in a different direction, but Then we also have the UK deal too, so I think that we're going to start to see politics really come into play with the dollar. And I think that the dollar definitely against these other currencies is going to start to continue, being the bear that it is, with gold rallying, interest rates staying low. But the one thing is I think that volatility, we could get a snap. So when this dollar does turn, you get your biggest corrective moves when they're counter trend moves,
right.
So, and if just a dollar snapback could be a very, very big, fast trade. And one of the things I was looking at, you guys are equity guys. Look at what happened with Tesla, just from Fridays to Monday. I mean, the stock rallied $150 on Friday. It opened $100 higher. I mean, the low on Thursday, I think, was $1,400. It was $1,800 on Monday was the high, So I looked at the options, and I remember back in the 90s, you guys remember when Qualcomm and AOL and all those high flyers, they were booming before the dot-com bubble. We had the big stock market correction.
Right.
Well, that was back, and I used to tell people, options expire, 90% of them are worthless.
Right.
But back then, you could buy straddles and strangles every single day and sell them out because they had this crazy $30, $40, $50 moves. Now we're looking at $100 moves in these stocks. I know. So, and I had a conversation with a CBOE guy actually on Monday. I'm like, the last time I saw this kind of like pricing and cost levels where you could do this, where you could actually be buying volatility like this and selling it out in the afternoon, it was right before we had a big calamity in the markets, and that has nothing to do with the economy. That's just a pricing mechanism. It is. Right? I mean, you know how when you start rolling in, I mean, options, you use that because it's leverage. It gives you a better deal, But when you're putting up now for, a month and a half out spread, it costs you $4,000 or $5,000 to put on a straddle or a strangle. That's expensive pricing. I don't care what the stock is.
There's no doubt. And, when you brought it up, I actually so Qualcomm folks had gone from 200 to 800 in basically 2 months. And I got 200, it was an ABC up. I got the last 200 points out of it, right? And I remember saying, like, this is sick. And just so if you don't understand this, folks, Qualcomm went from $920, okay? Well, here, I'll just give you the stat. In 2 months, it went from $270 to $980, and then 3 months later, it was back to $290.
Yeah.
That was the most bizarre thing in the world. I was thinking that, okay, this would take a little bit. I think that move was like in 6 or 7 days. I mean, it was like insane.
Right.
But the same thing happened to me. I came back and said, okay, man, we haven't seen that since then. Do you know what I mean? So.
Sure.
This
and
I think that's going to
hit the interest rates and the currencies. With this kind of pricing, when you have this kind of thing, when that bubble blows, we're going to see it's going to make March look like a joke what happened in the currencies. You know what I mean?
Cowboy, man.
Absolutely. So.
Well, listen, man, it is always a pleasure. Great education. I'm going to be keeping my eye on that Swissy all day long here, man. Okay.
Me too.
Yeah, it's the only one I got for you guys. It's the only buy
it's a good one.
Right now.
It's a good one, man. It's a good one.
Parity right now, yeah.
Yeah. Thanks, brother. Have a great weekend. Safe weekend. Look forward to speaking next Wednesday.
Thanks, guys. Take care. You too. Be safe.
Thanks, Teddy.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 360, Nasdaq's up 113, S&Ps are up 45. Coming right back.